Hi, welcome to this episode of Industry Voice. And today we have a special guest, Jason Shapiro with Root. How are you?
Good, Jeff. How are you?
Good. Glad to have you on this episode, especially after, at the time of this recording, November 5th, last week, you guys were in the news. You guys had a big pop in your stocks, and you guys had a really good third quarter report on the earnings. So congrats.
Yeah, thank you. It's been a long time coming, a lot of hard work from a lot of really talented people here at Root. So it's nice to see the performance recognized by the market.
Yeah. What I love about that day was immediately after you guys had a positive earning, the stocks pop, you guys took the momentum and announced that you guys are now appointed independent agents. So for our audience, what I love for you to do is talk a little bit about yourself, give our audience a background of who Jason is and what you're doing at Root, and also what are your plans in growing your independent distribution penetrations with the independent agents.
Yeah, sure. So a little bit about myself. So I do not come from an insurance background. I've been with Root for about 18 months now. I was with a predominantly background in automotive technology companies, serving automotive retailers, manufacturers, tech companies for most of my career. So I'm an auto guy at heart. So auto insurance with Root, not too far of a departure. In that world, I also had a VC risk-based business for vehicle service contracts that we had sold prior to my time here at Root. And so familiar with risk-based businesses, but new to auto insurance specifically. But my specific role of responsibility here at Root is I manage all of the revenue for all of our B2B distribution for the company. And so if you think about how the company is structured, right, obviously Root predominantly a direct-to-consumer company focused on acquisition in the direct markets. And I handle all of our B2B partnerships. And so when we're getting distribution through automotive companies, we have an exclusive partnership with Carvana for embedded insurance. I handle all of the IA business for the company, anything that comes from outside of the world of performance marketing. So that includes independent agents. And happy to talk to you about our strategy for IAs and where we think IAs fit in the mix. We've announced some new stuff about the IA business. We've been testing and doing some work behind the scenes with a couple of big players for the last probably 12 or 14 months.
So I have a lot of questions. By the way, I'm looking at LinkedIn. Your background was Auto Trader, TrueCar, Cox Automotive. So it's all the who's who player. Like you understand the whole vendor relationship, partnership, embedded connectivity, all those buzzing keywords because you literally live that life every single day.
Yes.
Let's talk about partnership. So you guys first launched with your independent partnership, I believe with Goosehead, correct?
We launched initially with Goosehead, started doing some stuff with them in kind of Q3, Q4 of last year, and then started to scale up with some integration work in first quarter of this year. They're a very good partner of ours and good relationship.
So is that the first pilot that you guys?
It's really it's certainly in the modern era of Root. It's the first kind of integrated pilot and program that we've been doing with Goosehead, and that has been run now at full scale for the majority of this year. But we initially started with a desire to kind of feel out the independent agent area to understand what profitability looks like there, what does acquisition look like there, what do losses look like there, and find out there's a way for us to use our philosophy of creating exceptional insurance experiences to do that for agents, right? And so we started testing different, just at the time getting agents appointed. Obviously, in 2023, a lot of the large incumbent insurance carriers were not writing new business. Root was in a very good position to take on a lot of new business in 23. And so it started as a simple, hey, we're here to help you out. We know it's a bit of a time of need for you as an agent because you're limited on your carrier choices. And so we started with just showing up for them and showing them that we're there for them and that we can help support their business in a more difficult time. And that evolved itself into leveraging Root's technical capabilities to reduce friction for agents to be able to quote and bind policies. And so we were able to effectively reduce their quote to bind time in their quote to issue tool by about 50% with the integration work that we had done. So really very integrated user experience, friendly user experience for the agent to be able to do their work more efficiently and much quicker.
2020 to 2023 is an interesting time on how everyone was making so much money. Everybody wanted to appoint everybody. Here's overrides. And then you have go all the way down to like everybody shut down. Probably in my entire career, the wildest 3 years run. So let's talk about integration. Do you guys offer back-end service to your agents? Or is it just you sell the product and you also because like a lot of people they offer like call center experience service if the agent don't want to take on that service, right? Do you guys offer something like that?
Yeah, so we do. We're still at the very beginning stages of this, right? And so that's the natural next step evolution, right? Is that we're dealing with kind of front end product and acquisition and that experience of quote to bind. We do have the capabilities to offer service to the agent or agency, but those are things that are still being actively kind of developed. You know, Root being a much younger company, we have not worked with agents for a very long time. And so we try to communicate while we have a very big desire to do so, right? It's a little bit of a learning curve, certainly for Root and where we are to build out those processes and those standards. And that comes from everything, not just, you know, servicing of policies, but even thinking about like how we're monitoring agent behavior and how we're understanding, you know, production at the agent level or the individual producer level and what they're able to do and how they're doing it. So there is a little bit of a learning curve for Root, but we're excited about the opportunity and the challenge. We are hearing from some of the larger agencies that we work with that they do have a desire to want to be able to manage the service element of their customers, which they think is very important. And so my job and my belief here at Root is that our job is to facilitate exceptional experiences for our customers. And so that means really listening to our customers. So I do think we take a different approach in terms of partnerships. It's not a, you know, to me, and not coming from a carrier insurance background, it seems like the carrier agent relationship is a bit adversarial at times. We try not to be like that. We try to be put them first and serve their needs. And so as we hear more desire to service customers, we'll continue to develop and build out our systems and capabilities to do that.
A lot of the carriers last 2 years had really good luck on the non-standard side of things. Yep. Is non-standard product something you guys are looking at, or are you guys more of a standard preferred product? What would you categorize you guys?
Yeah, it's changing quite a bit, right? As we get more into some partnerships that are changing our mix quite a bit in terms of, you know, standard or non-standard to more preferred, ultra preferred. And so we kind of do run the gamut, and it's really dependent on the channel we're talking about. So I would say that predominantly Root is focused on being a standard, non-standard carrier. And that makes total sense if you think about our use of telematics and how we founded the company based on telematics and user-based insurance and all of our technology there to determine risk profile. And, you know, those customers that really need insurance, but maybe have no credit or poor credit and can't afford the insurance that they're provided by other carriers, you know, our telematics product gives that customer an opportunity to get affordable insurance based on being a solid driver, right? And so a lot of our direct consumer business, as you would obviously assume, is focused on non-standard and standard. And those are great customers for us. We do love that customer base. We love the idea of being able to help provide equitable insurance to customers who are great drivers. I mean, that's at the core of who we are. When you shift into partnerships and you shift into independent agents, right, it's a little bit of a different profile. Certainly it's a different profile, and sometimes it's a very different product. And so we do have the capability to determine if we want to offer telematics offering for independent agents, or do we want to offer a standard insurance rating product? And we run the gamut. And so it really depends on what the agent's looking to do and what the agent thinks that their customer mix looks like. We do tend to skew certainly more preferred, ultra preferred. Some of that obviously has to do with the agencies that we currently partner with and who their core customer is. And so it's very interesting to see us go kind of ultra preferred in some of the agent business that we have, and then standard, non-standard, and our direct to consumer. And I would say some of our partnerships in between kind of run in that kind of mid-market area. So we are kind of covering the gamut. We certainly find that through independent agents, we see more multi-vehicle, more multi-driver policies. They're typically higher premiums. Obviously, they have the relationship with their agent, and so they tend to persist longer than what we see in the direct-to-consumer channel. And so it's a mixed shift for us in terms of portfolio, but in a very positive way. And so we're thrilled to be playing in that space.
So while we're talking about the standard, non-standard preferred line, I had one more. So there's another line, the ultra high net worth and collectors.
Yeah.
With all the GTRs in the background, I'm pre-call before we start hitting record, you and I both talk about we both love cars. Like, is that a time that you guys ever see yourself going into the Hagerty space?
Yeah, I mean, look, I don't think anything is out of bounds for Root. I mean, I think you have a company that has a really strong foundation in pricing, analytics, data science, and we do believe that we can figure out right pricing models and right underwriting conditions for different sets of vehicles and different sets of people. And so we are, actively talking to several companies that are more in that ultra luxury high-end vehicle market. And I happen to have some ties to those companies and those connections throughout my career, and being a background in automotive and being kind of a car junkie. And so I would say it certainly is not part of our mix today. Could it be part of our mix down the road? I think the answer is yes. It's not something we're necessarily actively pursuing until opportunities come our way. And as opportunities come our way, we evaluate those opportunities and determine how we can best serve the customer. And that really comes back to the core of what we're about here at Root is solving customer pain points and problems, meeting customers where they are, and providing ways to help them solve those problems. And so we really pride ourselves specifically in kind of our B2B world on providing value to the customer so they can provide value to their customer. And if you live in a B2B to C environment, right? I mean, that's our core responsibility, right? If agents don't believe in our product, or if our product is not competitive, there's no way they're going to put us out in front of their customers. And frankly, I don't blame them. So it's really on us. It's on our product. It's on Root as a whole, underwriting, pricing, onboarding, to make sure we're providing an exceptional experience. And that way people want to present Root to their customers and they have a good experience. And what we're frankly have found in the independent agent channel is when we've gotten an opportunity to work with a lot of these agents, we're taking up a pretty material double-digit market share of their portfolio. And so that tells me that our product is priced competitively. It tells me that our experience is easy for the agents to use. And when push comes to shove, in a lot of cases, they're choosing Root over maybe an incumbent carrier because we have reduced friction in the quoting or binding experience, or we provide a technical advantage that makes it easier for the agent to facilitate their job and do their job in a shorter amount of time. And so that's where we get excited.
So I'm so curious on the high value, like Lamborghini of the world, and then the collector of the world, like the Shelby GT Mustangs of the world, Eleanor, right? Like what percentage of total vehicle policy do they qualify for under the big picture of the entire auto insurance industry? But let me shift into maybe a sensitive conversation. Teslas and EVs, with Tesla coming out with their own insurance the last couple of years. And Elon actually made the news last week about how much he want to continue to grow Tesla insurance, right? How do you guys view EVs? Because every carrier I talk to, they have a different view on Tesla. Like some don't want to touch the Cybertruck right now. Right now, Cybertruck is in the news because like a couple of carriers stopped insuring Cybertrucks. Geico is being one of them. Don't quote me. I hope I'm not misquoting here, but I saw a couple of news that Cybertruck is being dropped by a couple of carriers. They don't even offer options. So how do you guys look at EVs, especially Teslas in general, right? Because they're a big segment of auto insurance right now. Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
So we do cover EVs, certainly. I do also have an EV in my household. And so,
Which one?
We have a Rivian, the
Nice.
R1S, which
Such
we
a
love.
sexy car.
Yes, yeah, it's we have the quad motor launch edition, so it gets 850 horsepower. It's plenty of power for my wife to take the kids around to the grocery store, but
That is
it is a fun car. Yeah,
that's a lot of horsepower for grocery cars.
yeah. I think it's 6,500 pounds. It does 0 to 60 almost as fast as a stock GTR behind me. It's 0 to 60 in like 3.0 seconds, and so it's pretty wild at that size. It can go that quickly. But so we do cover EVs, right? So today in our core business, as you would suspect, in like our D2C channel, we don't pick up a lot of EVs, just given the nature of that customer base. We see quite a bit more when we look at independent agent, when we look at some of our partner distribution. We see quite a bit more EV in the mix. We do today have a cap, so we don't run into Cybertruck because at that price point, we kind of cap it today for our standard program, unless we're negotiating with a particular partner, $150,000 price point cap. And so, we do pick up Rivians, we pick up Teslas, not a lot of the super high end, anything above that 150K cap. But, I would say for us, a lot of it is still about building out the book. We're still pretty new as a carrier. And so making sure that book and that portfolio is thick enough and relevant enough to make the right assumptions when it comes to modeling, pricing, and data science to make sure that we're in the right spot for the right cars at the right time. And I would say that we're still having pretty healthy appetite to pick up those vehicles and learn. And we believe that that our team is best in class to make those adjustments and be able to continue to provide coverage for those customers.
Let's talk about that for a second. But before we talk about data science, I want to ask that question. Just for disclaimer, how many states are you guys currently in today?
Yeah, so we write in 34 states actively today. That includes California. I know that I'll give you some pretty breaking news. We just got our filing approved in the state of Minnesota. So Minnesota will be our 35th state. And we do see a map for us. We see a map of, being filed in the continental U.S., all states by the end of 2026 is kind of our target. And so we do look to get back to state expansion. Certainly when you think about B2B distribution, partner distribution, a lot of the brands, a lot of the companies that we align with to help solve their insurance solutions require a 50-state footprint, right? They want to serve their customers in all states, and we want to be able to do that for them. So a large priority for us for the expansion is to make sure that we can supply some of these national brands with a national coverage for insurance that their customers deserve.
You guys are in California, which is like one of the hardest states. Are you guys in Florida, Texas, New York?
Yes. So we're not in New York. We're in California, Florida, and Texas. Texas is a very big market for us. California is a good market Florida's a good market for us. Not in New York yet, although actively working for that. That's not too far away. Most of our gaps for coverage in the company are really the Northeast. So New York, New Jersey, Massachusetts, and then you could look at not in the Northeast, but North Carolina and Michigan. Those are really a couple of our big gaps of volume. Yeah.
So just repeat that real quick. You guys are in Michigan and you guys are in North Carolina.
Yeah, no, not currently in Michigan, North Carolina. Yeah, sorry. So the current mix with not New Jersey, actively working in New Jersey. Yeah. So the gaps in our coverage are New York, New Jersey, Massachusetts, Michigan, North Carolina. Those are kind of the 5 big ones that we're missing today. In our current footprint, we cover about 75% of the U.S. population. That's
really cool. Seem like, between California, Florida, Texas, those are 3 of the hardest states. And if you guys are in there now, I don't see how North Carolina or Michigan would scare you. Now, New York's a different animal. I think all the carriers I talk to, literally New York or California are the last 2 they will enter. And you guys already entered most of the hard ones. So yeah, that's pretty cool. And one thing I want to talk about is Geico made a lot of news this year about entering the independent agency space because for a long, long time, their mission was to replace the independent agents. And now they're entering the independent space, fighting with Progressive on a very profitable book, right? If you talk to Progressive, their independent agent distribution book, auto book, home book is one of their most profitable, right? So Geico now want a piece of that action. They made news. Now you guys are coming in. And it's very interesting to look at the the map that Geico chose as their first 5 release states, which was Ohio, which easy one there, right? Indiana, Tennessee, Texas. And when you guys rolled out, did you guys roll out all 34 states with independent agents right away, or did you guys go state by state?
Yeah, we're not going state by state. That's not been our approach. Our approach has been whatever the agent needs us to cover, we'll cover. And some of this is a bit of, excuse me, the hangover from 2023 and not having carrier availability and having such tight carrier supply. But it also speaks to kind of what I had touched on earlier in that conversation, was just our desire to really meaningfully serve the agent to solve their problem. And so we did not take some sort of state look at it and that, hey, we're only going to roll out in these 3 or 4 states and then we'll look to expand. We actually find a little bit better use case of understanding behaviors and competitiveness by looking at a wider footprint of states. We've been relatively selective. I would say the learning curve here for us is being selective with what we consider, some high level premium agencies to start the business, and then to start opening up to other players at different levels to understand, what we're getting, what does the behavior look like, what does production look like, what do costs look like, what does unit economic, all those things, right, go into the calculation. And so I would say so far we've seen really good business for Root, and we're continuing to expand into the agent channel. And so that's why you've seen a little bit more of us go down to more of a grassroots campaign to accept some inbound traffic. And if agents meet some core criteria, they just get standardized and we can get them onboarded and appointed, start to understand the portfolio. So very excited. I mean, I don't know how many we did yesterday. I think we did 14 or 15 new agencies yesterday.
So if we can talk tech for a second.
Sure.
Your quoting platform, is it something like similar to other InsurTech auto carriers where we can embed it into our email links, we can embed it into our websites, send a link to somebody, and then a consumer can quote to buy on their own as well? Because you are doing that on your direct to consumer channel. So did you give that power to your agents?
Yeah, we meet the agent where the agent wants to be met. And so, depending on the agency and what they're trying to accomplish, we have the full capability to do anything from RC1 to RC3, full bind API integration. And so it really depends on what the agent wants, and we meet them where they are. And so that's awesome. Not just specific to the agent channel, that's for all of our partners. I think you look at things that Root has been able to accomplish, like our 3-click, 30-second bind experience for Carvana post-purchase, right, as they're buying their vehicle. And you'd look at that as like the optimal state, right? You can suck out all the friction. We can run some reports and some things via the API, and you can provide a delightful insurance experience for the customer. While that's great and seems intuitive that that's the best thing and we should do that for everybody, most partners aren't ready to do that with us, and that's okay. And so we can start them somewhere easier to determine if there is good signal and good result before you make those types of investments. And so a lot of cases, it starts with kind of a price to bridge where we're offering RC1s up to customers, and then we're bridging them over, and then we're letting them transact and take payment on our application. If they want fully embedded, we can do fully embedded from the jump. And if they want less than RC1 and they just want to test us out a little bit and do some sort of ad tile configuration over to kind of a bridge, so then we provide price and we provide the experience on Root's property, we can do that too. And so there's really 3 phases in the crawl, walk, run, and our approach is to meet the customer where they are. And if they're a more technical agency, like probably a Goosehead is pretty advanced and pretty technical, they have their own systems, they have their own kind of technical advantages, we can use that to meet them and partner with them for a much more tech forward application for their agents. Whereas if it's an agent that doesn't have that or doesn't have those technologies, we can just start them somewhere lighter weight.
For a guy that only been in insurance a few years, you are answering all of my questions pretty good. So let's go in just for our audience. RC1, RC3 means recall 1, recall 3. And if you're in the rating world, rater world, you understand those terms. Are you guys working with other raters? Yeah,
so we're in discussions with some of the larger rater platforms. We're not currently active with any of them today. That probably changes in the next, couple of months. Mm-hmm. We do see that as an interesting channel for us. Just something we haven't pursued today, as we've really worked on meeting the customer for the agency with where they are and determining what type of application they want, what's their capability to build into the API. And I would say all of our API documentation is public facing. You can download it from the internet. It's accessible by everybody. And then it's pretty intuitive. We rebuild it and work on it kind of daily. That's part of our thing here, which is great. And so we pick up different nuances from different agencies, different partners that want something different in the API that the API doesn't have. And then we're triaging that, and then we're updating the documentation in relative real time. In fact, a very funny story is we have a large agency that wanted something specific, and we went out and we built that application for that agency, and then we updated the documentation. And within like 3 or 4 days of us updating the documentation, we had another partner that was actively integrating with us that had noticed that we had added that to the documentation, and they then wanted to add that to their integration as well. And so it's really great feedback that we get from partners that can tell us what they like, what they don't like about what Root has to offer. And what I think you find from Root, which makes us, I think, extremely unique in the space as a carrier, is that we are so tech forward and we're building in real time. And so we can make changes and alterations, I think, a lot faster than maybe a traditional incumbent carrier who's really not as focused on the technology aspect of things. And ideally, that just makes us easier to work with, right? So therefore, the agency feels like, or the partner feels like, they're getting a more custom, bespoke experience, and Root is here to kind of be their somewhat custom dev shop to build the application that they want for their customer. And that's ultimately where we get really excited. I mean, it's great that we're a carrier that writes in, now 35 states, but the company really prides itself on its technical advantages and providing solutions to technical problems. And so that's what gets us really excited. And when we get partners that want to work with us to solve different things and to provide a better insurance experience for the customers, that's where we're all in.
How do you guys feel about Turo, Uber, DoorDash, all these fractional gig economy using personal autos? How do you guys feel about those?
Yeah, I mean, we talked to a bunch of those companies. There's some interesting opportunities there, I think, for both parties. We're pretty limited in our kind of rideshare coverage today. I think it's like 14 states that we're currently available in. And so it is somewhat limited. It's probably an area of the business we continue to focus on more in 25 and beyond, because I think it continues to be a growing segment. It's a challenging segment for a lot of reasons of which but we're actively having those conversations and trying to figure out, what is the path here? What is the play here? What can we do with what we currently have filed in our current policy configurations and our current forms, and what can't we do? And, to us, it's always about lightweight testing. Like, let's test, do we see smoke? Is there signal? And if there's signal, how do we build? How do we rally around a growth plan to scale? And I think that is also a pretty unique value proposition for our partners and for Root, is that we're never going to force somebody into a product configuration or a way of doing things. We believe that everyone should have their own thoughts on how they want to serve their customers, and we're here to help enable that journey for them.
Being in states with heavy bilingual spoken, California, Texas, you guys have a backend support in your call centers?
We do, yeah. We have a pretty robust call center staff. I would say they're pretty best in class. I mean, obviously, we've had a lot of hiring in that department when you look at the growth that we put up in 23 and 24. So we really scaled our claims. It's all in-house. All of our systems are in-house, built in-house. Pretty much almost all technology at Root is built internally and in-house. And so it provides us the ability to service and scale at a rate that others that are outsourcing all of these components really can't. So we see that as a big advantage, big competitive advantage in the market, is being able to control the claims experience, being able to control all of that technology, all of the things that we're utilizing to facilitate these exceptional experiences are things that we can manipulate and adjust real time. So like if our rate call ones are overpriced for a particular partner and they're seeing a vast amount of rate shock when they get from RC1 to RC3, we can adjust that by partner, by market. It's all modular. So like we can make adjustments and tweaks without compromising other partners in other parts of the business to make sure that we're dialing in the right experience for the right partner.
That's pretty cool. Man, I've been rapid firing all these questions. Like now I'm trying to, okay. So let's talk about goals for a second.
Yeah.
What would be Root's goal for independent agent penetration and distribution, and what's Jason's goal?
Yeah, it's a good question, right? I mean, look, independent agents still make up, I think, about 35% of all the business kind of sold, right? And so, and going back to my dealer days, my automotive days, it's kind of similar, right? Like there's always this thought that, oh, the dealership's going to go away, or the dealership won't be part of the transaction, and it's all going to be, Apple stores and product stores, and you're not going to actually deal with the dealer, right? That just, to me, that feels far enough away that I'm not super interested in paying attention to it. And it feels the same way to me in the insurance world, right? Like agents have been a core part of this ecosystem for 100 years, right? They're not going to go away tomorrow. That percentage is not going to reduce by some significant amount next year or the year after. And so it's really important that we get the right experience put together for the agent, and we prove that we can be meaningful to our partners in that channel. I think we want to get to a place where we could represent probably half of the market. I feel like is an achievable goal in the coming years. We
Big
look
goal.
at, it's a very big goal.
Big goal.
I think you only
you said
get
it
to,
so calmly, half the
Yeah.
market. I'm like, that's a big goal.
Yeah, I mean, well, we look at it, right? We look at it a couple of ways in terms of like, how we're going to get there, what's our roadmap, and then, which agents fit the profile mix that we're looking for, which agencies. And I think we've got pretty good line of sight on a bunch of kind of what I'd call like the jumbo and large ones that have national coverage and huge footprints. And you've seen us now start to trickle our way down into kind of more of that medium to small size. And I think we can handle some of that. That's what we're testing now. I think when you get into like the smaller individual agents that are there's obviously very, very many of, that becomes more challenging. Like managing some of the larger jumbo ones in effect are a little bit easier and gets us kind of the market share that we want. And as we start to go into the large mediums and then medium small is kind of the roadmap. But we see this channel to continue to grow for us over the coming years. And I think half sounds like a good number.
Let's talk about property for a second. Is there any rollout of property being talked about inside Root?
Yeah, so it's certainly something that we're always talking about. We don't. The only other coverage, is a pretty much predominantly monoline auto carrier, right? I mean, we do have our own renters product, and so we have renters in 9 states, and so it's not insignificant. But I will tell you, I have not spent a lot of my 17 months here talking about renters insurance. I mean, it does come up from time to time. So the thought of expanding our renters footprint certainly is one, and then obviously going into home. I think the belief that you'll hear from myself and from Alex and the team is that I'm not sure that we've totally nailed auto yet, and I think the goal here for us is to be in a very good spot for auto for our customers and our partners. And as that gets there, we look at expansions into property and home and some other things.
While we're on that subject of auto, have you guys thought about commercial?
We've got a couple partners that are pushing us in that direction. So yeah, we don't do commercial today, but again, it's very much on the roadmap. It's in several discussions. For us, a lot of times it's we have to have the reason, right, as to why we're going to do something. We're not going to just, fortunately for us, we've been busy, and so we can't necessarily just get away from kind of our core mandate to go, build an auto product or get into super high-end luxury as much as we would want to. Although when we talk with specific partners that might have certain influence, it becomes more of a reason to pay attention and to figure out those parts of the business. And so we are actively talking about those things as well, but it's really dependent on the need and what the opportunity is for commercial.
People in the commercial auto industry, if you talk to carrier, they will tell you it's tough. Which really is, right? Commercial auto, commercial trucking, both are tough. But if you just go back and look at if everyone is either competing with Progressive or chasing Progressive, they prove to be the outlier on the loss ratio and the combined results on the commercial auto. And I just hope that, for our audience sake, they want more choices, they want more options, and the more players jumping in, then it's better for the industry. Better for the consumers as well. Yeah,
we're 100% aligned there. I mean, I think it does come down to being able to have choice. And we talk to a lot of the agency partners we have, they sometimes do feel stuck with what they have to work with. And so, again, it kind of comes back to Root being uniquely positioned in that we're not enormous as a company carrier today, but we're big enough to be super relevant with our footprint, and we're also small enough to be super custom and super bespoke. And so that puts me specifically in a very unique and favorable position in that I can really listen to what the customer wants, and then we can evaluate and work on that together to form what I would say mutually beneficial partnerships that help both parties. And that I envy that position. That's the position we really want to be in. And you can't always be there forever, depending on how quickly you scale and how big you get. But for where we are now and kind of the growth rate and what the business is doing, it does give us that opportunity to really truly listen to what the partner wants and then to build some pretty cool stuff.
Especially if you look at like how many insurtech carrier out there, like Hagerty of the world, right? Next Insurance of the world. You guys could easily partner up with them where you handle all their commercial autos. Just a thought,
Yeah, sure.
Being a newly public traded company and insurtech company, how are you guys attracting talent? Like you guys always talk about, I hear people talk about like we have some of the smartest people in the industry. Like how are you guys attracting that talent?
I think, for us, it's, good talent replicates itself and attracts other good talent. I think the company, right? Look, if I think about the company, and this predates me certainly, right? The company has gone through some difficult times, right? I think everyone just obviously publicly documented the company struggled for a number of years shortly after the IPO, and you had to go through a situation where we had to have, unfortunately, layoffs and riffs, and that's never fun, and that's never anything anybody wants to do, and those are very difficult times. But what I would tell you is, coming out of those times, you end up with a hardened core of people in the company that are, they're generally people that are all strong producers. Of course, you make some misevaluations when you're going through some layoffs or some of those situations, and you do lose some good people. We've had actually a bunch of people come back that were caught up in some of the rifts that we had when the company was struggling. But you have this kind of hardened core of individuals that are producers, and they get stuff done, right? So like, when you have that, it inspires the people that they work around, because it's like, hey, I got to go keep up with Steve, or I got to keep up with Susie because they're killing it over here. And there's this kind of healthy competition between the business in a way that everyone's winning, right? So like, I know earlier we were on a town hall just last week, and somebody had asked a question in the chat about what distribution is going to grow Root more in 25. Is it going to be partnerships, or is it going to be our direct consumer performance marketing channel? And I love that, because the answer, of course, is, look, we want to be able to fire in multiple channels at the same time, and we want all of them to be successful. But the healthy competition of, direct to consumer traffic versus partnership, independent agent traffic is real, and it's fun, and it gets people excited, and people have a sense of purpose, a sense of being when they come to work, and they want to win. And I think that just permeates between the company and the employees, and that creates a culture of highly talented individuals.
Man, if I had to grade this podcast, you're crushing it. And there's funny things like you only been in insurance for like 2 or 3 years, and then you just know your stuff.
17 months. Yeah, 17 months.
What's crazy is there's a lot of learning curve you had to go through to understand each step of the distribution channel and then the pieces around it.
I'm learning every day. I talk to our data scientists and our actuaries, and my head is oftentimes spinning, but it's kind of a get thrown in the pool and see if you can swim type scenario. And then to me, if you couple that with having the right intentions to provide the right services to our partners, and you really do a good job of listening, you can pick up a lot of information fairly quickly. And so it's been a fast learning curve, but it's been a very fun one.
Jason, I am thoroughly impressed, and I'm sure this is not the last episode we will record. We're probably going to do a couple more coming up. I'm going to pitch a couple things offline and then see what you think of my ideas. I got a lot of ideas these days, but thank you very much for coming on the episode. And I appreciate you just coming here to talk about everything that Root is doing.
Yeah, thanks for having me. Look, this is a great opportunity. I love the work that you've been doing. It's been great to connect with you and share a little bit of the success and some of the things that Root's working on and we're doing. And so, yeah, we'll stay in touch for sure. And anytime you want to talk cars, you let me know, and we'll get into a deeper conversation.
For sure. Thank you.